You're listening to the Generational Wealth Through Commercial Real Estate podcast. Your host, Will Smith, is a former NFL player that found his passion in commercial real estate. Every week, you will learn from industry experts everything you need to know to get started investing in commercial real estate to build generational wealth.
Today's guest is Dr. Meetu, president of JMD Acquisitions, and she is an accredited investor, business owner, and certified commercial real estate professional licensed in Texas. She's an asset manager, and she also loves giving back to the community. She's a recipient of the International Sterling Society Award of Coldwell Banker and MGF Women of the Year South Asia Community in Dallas. She's also a certified commercial investment member candidate and pursuing her designation. So that is so awesome. We thank you for coming on the show. Your bio is pretty long, so I'm gonna just let you elaborate on what your experience has been so far in real estate, and why the listeners should listen today, because some people are going to tune out within 5 minutes of the show. So why should they listen to you today?
Okay. Hi, Bill. Yeah. So I am a business owner. I was running a business, a childcare center, and I have been investing in real estate since 2010. But I have been doing it on a very small basis, and I have my license, and I was working with a lot of investors, working on various kind of transactions like a medical office building, land, and other investment properties.
Yep.
And I was thinking of scaling my business, expanding my business of childcare industry. But I then came around with few people who were doing extraordinary in multifamily, and that caught my attention. So I decided to look into it. And the more I deep dived into it, the more it attracted me. Right. So I decided to sell my childcare center and focus fully on my multifamily investments.
Gotcha. So, as far as portfolio wise, how big is your portfolio as far as unit count and volume size?
Yeah, so we have currently invested in 800 doors, close to 800 doors so far. In my active portfolio, we just did an acquisition of 418 units. It's a $40 million portfolio. Wow. That includes the Capex. It's a Class C property in a Class B neighborhood, and our business plan is to reposition this property so that we can attract higher network, high demographic.
Yeah. We're going to talk about that deal later here in the show. Okay, so you say you was running, or you had a daycare business, and you decided that you wanted to go into commercial real estate, because you was networking with some other investors, and you seen the potential that was there, so you jumped into it. But my question for you is, why did you decide to go with multifamily instead of something like storage or retail centers? What was it about multifamily that you liked the most?
Yeah, very good question. Yeah, initially, long-term leases, they attracted me. And because I was working with many investors, but then I was closely watching the market also. And since few months, we have been with the inversion. Since few days, we have been seeing like there will be a decline in the commercial industry. Right. So I wanted to focus on something that is more stable. So multifamily, of course, if there will be a downturn and there will be a recession, still the people will be needing a house. Right. That's the reason we decided to go for multifamily.
Gotcha. Well, that makes sense. I mean, when you think about just the risk is spread out over, like you said, you just bought a 400 unit community. That's spread out over 400 people. So it's really hard to go upside down when you got that many people helping you pay for a building.
Sure.
Yeah. Okay. So, what are you guys doing right now to help you find deals? Because there's a lot of different ways that you can go about finding deals, but how are you finding yours?
Yeah. So, I am very active into commercial real estate. I have a lot of connections. I am leveraging those relationships, but so I know few sellers, and mostly the deals are from the brokers. CoStar, and the LoopNet.
Yeah. So let's touch on the brokers. What are you? I mean, you're a broker yourself, obviously, but what kind of conversations are you having with them? You know, how often are you touching them to get them to be able to send you deals?
Yeah, so I am connected with them over the LinkedIn, and so anytime they have something, they know that I am actively involved in these markets. So whenever they have anything, they just let me know. They send me a message, or if something is already in their market and I see it comes on the LinkedIn too. Plus,
Yeah.
I am already added to their databases, so I do get those emails and sometimes flyers too.
Right. Right. Okay. So are you guys? You said CoStar and LoopNet. So are you finding opportunities on those?
Yes, there are opportunities on CoStar and LoopNet.
Yeah. Okay. Okay. Because I mean, a lot of people kind of joke and say LoopNet is where deals go to die. So I was just wondering how you guys
Yeah.
are you kind of looking for the ones that's been up there for a long time to get a deal that way?
No, it's just, every deal that I come across, I look at the numbers, I do some small analysis. I don't go into deep diving into the numbers. I just look at the numbers, and if it doesn't make sense, then I don't go for it. Yeah. But yeah, sometimes there are deals on the LoopNet too.
Yeah. Gotcha. Gotcha. Okay. So how long have you been investing in, like, since you sold your daycare?
Yeah, so I started investing in real estate in 2010. I
Mm-hmm.
didn't do very big investments because my main focus was investing into my businesses.
Yeah.
So, but in 2019, last year, I decided, because I wanted to put my full attention on the multifamily,
Yeah.
and it wasn't possible with the other business where it needs my most of the attentions, because there were kids in my building and they were my prime responsibilities and liabilities.
Yeah.
So I decided, and then it was affecting my personal life as well. My kids were being neglected and affected,
Yeah.
most of the time. Even when I am with them, there is something or the other that is happening at the business. So that as an owner, I need that needs my attention. So even though I was physically with my family, but still mentally, my
Yeah.
mind was always at my work.
Right.
So
Right.
I found out that this is not going to work. If I have to go into multifamily and into syndications, I need to get rid of my business. So I decided to sell it
Yeah.
and then focus entirely on multifamily business.
Gotcha, gotcha. So, just kind of remembering back, what was the biggest challenge you faced when you was getting started in this?
So the biggest challenge was my mindset, the fear of failing, because I have been an achiever throughout my life,
Yeah,
and, I was doing pretty good in all the spheres, so, and then multi-family, I realized that, until I sell my daycare, I cannot do anything much, like it
yeah,
needs my whole lot of attention. So definitely there was a fear. But then my biggest buy, what is my biggest buy? My son, he's in 11th grade and
yeah.
he is going to college in 2 years. So I
Wow.
took that risk. So what is more important for me? If I sell my daycare and I focus on just my multifamily, then
Yeah,
I will be able to spend more time with my kids and family. So
yeah.
once I took that decision, everything was very easy.
Gotcha, gotcha. And a lot of people, face that same deal. Is the first thing you have to do is get your mindset right. I mean, because
Absolutely.
there's going to be challenges along the way. And the
Yeah.
thing you said there that was very powerful was you had a strong why.
Yes.
If your why wasn't strong enough, then you may would have got into this and said, you know what, this is way harder than I thought it was going to be. I'm going to just go
Absolutely.
buy another daycare. you know?
Absolutely no. Yeah, seriously, I was looking into the daycares, but I have a very big list of my feasibility.
Yeah,
So all the existing daycares, their numbers were not making sense to me, and
right,
there was not much potential into it. So
right.
I was doing ground up developments in Collin County, and in fact, I put an LOI. I have an accepted LOI for two lands,
Yeah.
But then, the fact that I will get the cash flow after 3 years,
Yeah.
and then my son, he is going to college in 2 years,
Yeah.
right? And I will be losing those 2 important years. That
Right.
was not justified. So
Yeah.
that's the reason I completely exited that business.
Yeah. 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 I mean, family is important, and family should always come first.
Absolutely does.
Yeah. So, what markets are you guys focusing on right now, and what do you like about those markets you're looking at?
So initially, I was focusing on just the Dallas market,
Mm-hmm.
Dallas Fort Worth market. Reason being, I'm local here.
Yeah.
I don't know the market inside and outside,
Right.
and I can go and have the property, have a look at the property anytime I want. And once I have done syndication here, I'm like more confident. Now my second is Texas Triangle.
Yep.
It's Houston, San Antonio, Austin, and Dallas.
Right.
And I am also looking into North Carolina and Arizona. The
Yeah.
reason being, there is a population growth there, employment is growing,
Right.
people are moving there, they have a lot of jobs, and they all are landlord friendly states.
Absolutely. I mean, I'm in North Carolina, and
Yeah.
Raleigh and Charlotte, man, they constantly show up on the top markets to be buying investment properties in, specifically multifamily. So,
Yeah.
you're definitely right about North Carolina market. So let's talk about that. So when you're looking into a market, you said the population growth, but what are some other things that you try to look at to say, hey, this could be a good market for me?
Yeah, population growth and the rent growth. I look at the rent growth too, and then of course the job sectors. What are the jobs over there?
Mm-hmm.
Because we are mostly focusing on Class B and Class C properties.
Yeah. Yeah. So are you, I mean, some people are against it, but I want to see what your thoughts are on it. Going into a market that's like Fayetteville, that's a heavy military town. Are you opposed to investing in an area that's like heavily dependent on one industry?
No, I haven't actually honestly thought into it. I have been looking at the places where the job is through like 2, 3 more employments, big employment sectors out there.
Yeah.
Honestly, I haven't looked into it.
Yeah. Yeah. Okay. I'm just curious on that.
Yeah.
Okay. So as far as the deals you're looking for, um, what is a good unit count for you? Because I mean, every investor is different in what they're looking for. So you said the C and B, but as far as unit count go, what are you looking for and why?
So yeah, if there is something like right now, I'm focusing on something around 120 units and more,
Yeah.
because then I can afford a professional management and I can give better return to my investors.
Yeah.
While if I might be doing it on my own, I would have looked into a smaller deals like 50, 60 units. But since I'm doing syndication, so I am looking more into 120, 150 units, and somewhere around 300 and 400. I see there is less competition.
Yeah.
If you are looking for something from 100 to 250, there are still a lot of competitors out there, and
Yeah.
some people are overbidding. I don't
Right.
want to go for that. So yeah, I'm looking for a deal that has more potential. For that sake, I am looking into the bigger deals as well.
Gotcha. And that makes a lot of sense.
Yeah.
Especially when you being over in the Texas market, it got to make sense to be investing way over here in North Carolina.
Absolutely. And one more thing, we have to look at it, right? If we are having units like 110 units or 100 units, right? If our 10 units are vacant, I'm losing 10% of my revenue. That's going to hit my returns.
Right.
While if I'm having 400 units, and then even if 40 units are vacant, it's only 10%, right?
Right. Right.
So that's the what, I prefer doing the larger deals. So if few apartments are empty or vacant, still it's not affecting my return.
Right. Now, something I want to touch on, that I don't often do, but I want to ask you, when you're looking into another market that you're potentially wanting to invest in, how are you building your team there?
Yeah, so I do have a lot of networking in different cities, so I prefer to go into the market where I have someone whom I can count on. So I do have friends in those markets. That's the reason I'm thinking expanding into those markets.
Gotcha. Yeah, that
Yeah,
makes sense. You know,
yeah.
and then that's the thing I want my listeners to understand is this business is all about relationships. You know, you can go out there and you can try to do it on your own, but I mean, the chance of you being able to scale it is slim to none if you try to do it
Mhm.
by yourself. And I'm pretty sure Meetu will agree with me on that.
Yes, it's a teamwork. It's a big teamwork. You cannot do anything on your own here. You need a proper people in your team whom you can count on.
Right, absolutely.
Definitely.
So let's talk about you find a deal, right, and you're
Yeah.
looking at it. What are the red flags you look for when you're underwriting your deals?
So I pay very close attention to the deal and the numbers. The reason because I have a research and analytical background.
Yeah,
So I might be doing a little extra than what other investors are doing. Yes, but closely pay attention to the details. Sometimes what we see, this is because the sellers have decided to sell the building, they will try to reduce the vacancy by giving the rent concessions,
yeah,
try to move in the people. So those are the particular things. Sometimes they don't pay the taxes in the current year, so that there is a greater NOI.
yeah.
And yeah, so those are the mostly things. And I closely pay attention to a one time expenses. Is there any one time expense that will not be happening very in the near future? So all those
Yeah.
things that I pay close attention to, and if I see that it's alarming, that's a red flag for me.
Okay, so you said you look at the taxes to see if they pay the taxes for the year, to
On the
see if they
same year, yes.
yep, and you said you also look at what was the other the one time expense and what was the first one?
The first one was the concessions, and if
Oh
they
yeah,
are renewing the lease, it should be at a higher rate. It
yeah,
should not be at the lower rate.
right, to try to increase the occupancy there.
Absolutely,
Yeah,
yes.
yeah.
Yeah.
That's right. And I mean, and sometimes when I'm looking at deals, you see the sellers trying to get ready to get the most out of their property. So they start jacking the rents up. So
Yeah,
they do increase the average rent across the portfolio, but what you see is vacancies tend to go up because they're raising the rents so much there. So that's something else I've
absolutely.
been saying as well.
Yeah.
Some good points there. Okay, so you've been doing this for a little while now, and you've been networking with a lot of people. What's some of the biggest rookie mistakes you're seeing people make as far as trying to get into the syndication game?
Yeah, some of the people, they are just not paying close attention, not doing a proper due diligence, relying on the internet data, like from the co-star, and not walking to the property, doing enough due diligence, shopping the comps. That is the biggest rookie mistake I have seen. Just they are sitting in different cities and doing the underwriting.
Yeah,
So I believe that this is one of the rookie mistake, because all the data out there, I personally go and then analyze it and make sure that it's accurate.
yeah. Now, well, so somebody listening, you say shopping the competition. What do you mean? Because some people are going to be new listening to this.
Oh, okay. So shopping the competition is right. If my subject property, the property that as I am interested in, I'll go around within 1 mile, 2 mile, and 3 mile radius,
Yep,
and I will look at the competition. Like, what is the competition? What is their rent? Right. So I go physically. I can get all the information from apartment.com or CoStar,
yep,
but again I prefer driving to the property, getting the getting the rent, what's the rent out there, and then also looking at the buildings, what is different that they are doing, or what do they have and what do we have. So that means shopping the comp.
right. Thank you for
Yeah,
sharing that. And that's very important. I mean, you got to think about these are the people that you're going to be competing against to,
absolutely.
raise the value in your property. So you don't want to. And another good reason to do that is you don't want to um, what's the word I'm looking for? Go over your budget on your rehab.
Absolutely.
Yeah. Yeah.
Absolutely. You want to have a pro forma that you can achieve. You can just not punch, okay, this is the rent, and then I will do so many upgrades and then increase the rent. While
Right.
if the other properties, they are not having the same rent and my market rent is already at the peak, there is no way I can increase the rent to my pro forma rent.
Right. Absolutely. So that's a very good reason why you want to take that extra step. It's worth it. It really is.
Yes, it is worth it.
Okay, so let's segue to the next segment of the show. It's going to
Mm-hmm.
be a deal deep dive. So
Mm-hmm.
I would like to talk about the one you guys just took down. You don't have to go over something that you don't want to, but we know it's 400 units, right?
418 units, yes.
And that was in Dallas.
Yes, it's in Fort Worth.
Okay. And what did you guys see in the deal that you was comfortable with taking it down?
Oh wow, it was an amazing deal. So it was with one single owner for almost 20 years. It hasn't changed for 20 years. What does
Wow.
that mean? That means a lot of opportunities for us, because since this was a cash cow for the seller, he haven't done much into the deal.
Yeah.
The rent was below the market,
Right.
and and it was a class C property in a class B neighborhood, right?
Wow.
Yeah, so we have a potential, to upgrade the units and then increase the rent to attract the higher demographic.
Yeah.
So these were the main things that
Yeah.
caught our attention.
Okay. Now, as far as the upgrade, like, what did you guys set for your dollar amount per unit on it?
It's 1.2 million.
1.2 million.
Yeah, so the selling price was 37.6 million, and then
Mm-hmm.
1.2 was our capex.
Hold on. What was the sale price?
37.6 million was the selling price.
Okay. That man for
Yeah,
400 units. That's
418. It was 90,000 per door, and our capex
wow.
was 5,000 per door.
Wow. That was that was a steal right there, man.
Yeah, yeah.
Wow. Good deal. So
And the location, main is the location. It's right of way Highway 20. So
mm-hmm.
whenever, in commercial real estate, people say it's all about location.
That's right.
While I believe it's not just the location, it's the location, accessibility, and the visibility. So this property is visible from the highway. That means we doesn't have to put any money towards the marketing of the property.
Right.
It's very visible and it's very easily accessible too.
Wow.
Yeah.
Wow. That is awesome. And you
That
guys got
is
a
that
great
is
deal there.
yes.
Now, what kind of debt did you put on it?
So it was a 30-year Fannie Mae loan,
Mm-hmm.
3-year interest only, and interest is 3.85, 12-year
Wow.
term with
Wow.
30 years amortization. So I have been blessed in this deal, honestly.
Yeah.
My first deal, and it has everything into it. Yeah,
Absolutely, man. That is awesome.
that is
Congrats to
brilliant.
you. For
Yeah,
sure.
yeah.
Okay, so and just final question on the deal here. Um, what is the exit strategy? Are you guys gonna hold it, refinance it and hold it, or are you gonna sell it in a couple of years? What's the plan there?
So if, we are looking closely at the market. So currently we are underwriting shows that we are going to hold it for like 5 years.
Yeah.
But we are seeing that we are reaching a pro forma without even doing those upgrades, right?
Wow.
Yeah, so we are just making it make ready, and we are able to reach a pro forma. So
Yeah.
whenever we feel like we are just ready, like we reach a pro forma rents and reach a business plan,
Yeah.
most probably in 3 years, then
Yeah.
we will have a conversation with our investors,
Right.
and then decide whether we should exit or stay or hold it till 5 years. But by looking at the numbers and the way it's progressing, we believe that we will exit in 3 years.
Oh, that's awesome. That's awesome
Yeah.
there. Okay, so good for you on that deal there. Let's segue to the last segment of the show here. It's the lightning round. Got 5 questions for you. Ready?
Sure.
What's the best advice you've ever been given?
Don't be emotional with the building. Be emotional with the numbers, pay close attention to the numbers, but don't get attached to a building. If a building looks good to it and the numbers doesn't make sense, don't go for it.
Yeah, that's some good advice. Don't fall in love with the property, fall in love with the numbers. There you
Numbers,
go.
yes.
Okay. What's the best book you've read this year or the last 12 months?
Yeah, so the best book, I was having this Rich Dad and Poor Dad since last 2-3 years. I never got an opportunity to read it, but when I sold my daycare, yes, I did got some time to read that book.
Yeah.
I really loved that book. So far, I was thinking like my home is my biggest asset,
Yeah.
but after reading that book, I realized that it's a liability.
Right. Absolutely. Absolutely.
Yeah.
That book changed a lot of lives and made a lot of millionaires.
Absolutely, absolutely.
Okay. So, what are some rituals you're doing right now that's making you a better investor or person in general?
Yeah, since now I understand that it's not just my money, it's my investors' money.
Yeah.
So I do a lot of due diligence before entering into anything. I did a lot of education, and I didn't try to do it on my own. I hired some professionals. I networked with people who are achievers. So, I'm constantly focusing on those relationships and on my learning to, to excel in this field.
That's awesome. That's awesome. What is one thing you're doing right now to help you improve your business?
So I'm doing a lot of networking with other achievers and similar kind of people to grow my business.
Gotcha. Yeah, I mean, it makes sense. This business is all about networking. If you can make the right connections, that's going to catapult you to where you're trying to go. Good deal. Okay, last question for you. If you can give your younger self one tip in regards to investing, what would that be?
Start early and don't be afraid to fail.
Yeah.
So I wish I started early, but again, it's okay. Everyone has their own calling, but if anybody could have suggested me, I would have started it much earlier. In fact, if I would have started in 2017 when I was thinking about it, then the market was still better.
Right. Yeah, you're right about that. Okay, good deal. Well, tell my listeners, how can they get in touch with you?
Yeah, you can get in touch with me via email. It's my first name, Meetu @jmdacquisitions.com, or you can reach at my cell phone 214-674-9867.
Gotcha. Well, Meetu, I thank you for coming on the show today. I'm sure you added some value to my listeners, and let's stay in touch in a couple of months.
Thank you, Will. I wish you good luck for your deals, and thank you so much for taking me on the podcast. I appreciate it.
No problem.
Thank you for listening to the Generational Wealth Through Commercial Real Estate podcast, brought to you by Onyx Capital Investments. Onyx Capital Investments works with investors nationwide to invest in income-producing real estate in emerging markets. Connect online at www.onyxcapitalinvestments.com to learn more about what we're doing. If we have added value to your life, please leave us a review.